things, even while I was at Accenture, more like an entrepreneur.
Yeah.
I come from a family where one half of my family is very entrepreneurial, the other half is very professional. And here we are at Kinara.
Right.
This became next. Strong as it is in my organization. I have about 40% women on my board. First seed capital of the 500,000-600,000 I raised, a third of that came from my business school class.
Okay.
So you know.
And lastly, what's the last thing that you did for the first time in your life?
We got to go to the Royal Garden Party a couple of weeks ago.
Thanks, Hardika, for doing this interview with us. As our series is named as Wiping Out the Norm, you've clearly been an example in that, not just in your personal journey, but also while serving the journeys for others, by providing financial capital to them. And these are people who were not discovered as such by big financial institutions like banks and even other startups. So in the first place, before I ask you about how did the idea of Kinara Capital come in, let me ask you as to how did the idea of doing an MBA come in, after you were studying computer science, because that's completely different and, it's very, very different from what you have learned in finance.
Yeah, indeed, very different from computer science altogether. And I think my journey to MBA wasn't a straight line as it seems at the moment when you look in the rearview mirror. But I studied computer science. I loved it. I loved building systems. I loved understanding the customer requirements, the user requirements, what was not working, figuring out how to fix that, building. My first job was actually writing code. So, it was literally like writing code that we could see would turn into something. And I really did enjoy that. And it was a consulting role with a client-facing role. I did that for many years. I traveled the world. And one of the things that happened along the way was I had the opportunity to come to Hyderabad. And at that point, I'd been away from India for over 10 years and not visited, actually, which was, a critical period between liberalization happening 93-ish, and I had come in 2003. And I came to Hyderabad and, my client was a very, very large software company, which we all use and products on our computers today as well. And I was here to set up a delivery center to support that. And as I was doing all of that work, two things happened. One, I recognized that I really saw this big divide happening in India, this transformation as a country that was going on from liberalization. And yet, there, as you drove in Hyderabad back then, which were really just two cities in Cyber City, there were two buildings in Cyber City. There was this noticeable difference on the streets as to what was not reaching to most people. So I went back. Part of me wanted to understand what I could do. India. As they see, you're always a desi wherever you are. So how could I contribute? And that led me to a variety of different things I did in a mentoring and support capacity as at programs that were in the Bay Area. And that prompted me to think about, well, what about my own learning and growth? And at that point in my life and career, an executive MBA was a better fit for me rather than a MBA that you would do few years into your career. So at that point, I'd been, in my career for probably about, 10, 12, 15 years, something like that, right? And so I went into this executive MBA program, and the idea was to fill the gap. Computer science is great, and one capacity. It's one cut, but MBA does give you a much more broader perspective. And then I had the opportunity to do this MBA, which was a joint program between UC Berkeley and Columbia Business School. So you had East Coast to West Coast, you had New York and hippy dippy California. So you couldn't pass it up. You had to take that and just be able to go out and just soak it all in and learn as much as you can.
So in terms of learning, what were your top 3 learnings from your time at MBA? Because you said that you could learn from perspectives of people from both the East Coast and West Coast as well.
Well, 3 things, I think the number one thing that I learned is that you need to be able to multitask and have many different areas of understanding in order to actually operate a business, whether it's a small business or a large business, right? You cannot just be a good HR person. You cannot be just a good strategist. You cannot just be a good ops person. You have to have enough and more perspectives around all of these areas to be able to know what your core strengths are, and therefore where you would need to complement, but know that each of those skills and each of those areas are key to running any good business. The second thing I learned was the importance of relationships. Relationships matter. How you develop that in your class, along with your other classmates, how you develop that with other people, how you built on that, how you kept in touch, how you networked, that matters. And the third, I would say the most important thing I learned, and this was at a time back in 2007, where we talked a lot about globalization. Globalization today, of course, everything is global, everything is connected, everything is so same and yet not. The importance of localization, that not all things translate. You cannot just take something out of place A, put it in place B, and have it work the same way, because the local elements, the local nuances, the local understanding is critical for everything. Like you came to Bangalore today for the first time, understanding traffic. You could say it's just another city. We have Uber, we have Ola, there's an airport, you're coming to a central location. But there is local understanding that is critical to navigating that as well.
Yeah, I know. I mean, the people here are also so different. I get to know about their behavior as well, how different cities and how different cultures operate. So I'm sure that MBA must have given you that exposure. But then what after MBA? How did you decide what to do next?
Yeah, and I think an MBA does a lot for all of us, who go into it, because from a perspective of you're trying to understand where you are in your life and career, and what is it that you want to shift to. Sometimes you come out of an MBA saying, you know what, I've done it. Now I realize that where I am is the right place for me, and I'm very happy. And that completes that conversation. For me, I think the bug of an entrepreneur was always in play. I did several things, even while I was at Accenture, more like an intrapreneur. I come from a family where one half of my family is very entrepreneurial, the other half is very professional. And so perhaps, having that backdrop made me rethink what I wanted to do. And a lot of that led into exploring, thinking of what's next. And here we are at Kinara. That became next.
So what was the triggering point for you where one day you decided that, okay, I've spent 2 decades at Accenture doing so much. Now it's time for me to move on. And where did you take that decision? Do you remember that day?
I wish it was so simple as an aha moment and it all happened in a flash, But the truth is, these decisions don't come like that. At least it did not come like that for me. I didn't just wake up one morning and say, I quit. It was actually a lot more gradual. It was more calibrated. And really what happened was, I would say it happened in parts, right? So part one, I think you hit upon the first nail, which was doing the MBA. It makes you soul search. What makes you happy? What do you want to do? That was part one. Part two was coming to a milestone birthday that makes you think, right? Where are you in your life? What is it you wish to do for the next, few decades? What do you want to feel like you have accomplished? And so that was part two. And then I think part three just happened a little bit organically, which was, and that in the organic part was, I was already working with social enterprises. I was already supporting them in a mentoring and advising capacity. And the one question or one challenge that kept coming up was about lack of access. And this was a time when I'm thinking microfinance is going gangbusters. SKS had just IPO'd, the only ever second microfinance to IPO in the world at that point in time. why is this a challenge in India, right? I couldn't compute. So I spent some time, 2 months, 3 months coming out to India, talking to all kinds of individuals, bankers, entrepreneurs, small businesses, large businesses. And it took me back to my own childhood. I grew up in a very you asked me where I grew up. I grew up in Bombay in a very middle class Gujarati family. My mom's the entrepreneur. My mom's side of the family is the entrepreneurial side. And I remember her running a small business. She ran many little small businesses, but one of the ones that I remember most because it was through my teenage years was a provision store. And I remember that there was always this thing, she knew what the customer demand was in the area, but to stock up to that demand, there was always a working capital gap. And so here I have this situation where I'm introspecting what I would like to do next. I am spending time in India and trying to understand what is this financial access issue. I am then, talking to my mom saying, hey, can you remind me what was some of the challenges? What was happening? How did you solve for it? And realizing it was really, really tough. And I expected that post-liberalization, that this would not be the case for small business in India, but I was wrong. And so all these things aligned to say, look, how can I prove that there is a way for us to fund the missing middle? And so, I ran a pilot actually in Bangalore. I ran a pilot to see how we could, essentially establish that small businesses needed capital, but most importantly, that they were risk-worthy. And while doing that, I was also pitching my idea for funding to a lot of investors in the Bay Area. And people, because again, networking, right? Like networks are important, and networks can be very good and honest at times. And as I worked through my networks to talk to individuals, they would turn around and say, "Oh, that sounds like a really good idea. That's great. Are you going to go to India and run it?" And when the 10th person asks you that question, you have to stop and take stock. As what am I missing? What is the message here? And the message was actually quite simple. We will back you, but we don't think this is an enterprise or an idea you can run by sitting in Silicon Valley. And perhaps the undertone of that question was, how passionate are you about this idea? That are you willing to move halfway across the globe to run it? And that was a question that I had to challenge myself with, right? That is this just like a new thing I'm exploring, or is this something I truly believe in? Is this something that I am willing to pack my life in a 40-foot container and move across the globe? And the answer was yes. It really was something that meant something more than just an idea. It meant something that I felt had tremendous opportunity for impact, and for which I was willing to move halfway across the globe again.
Understood. Wow, that's quite a story. But how did you choose Bangalore as your pilot city?
That was a very business decision, in all honesty. Bombay would have made a lot of sense. I grew up there. I have family there. I'd been away for 20 plus years. So coming into a city, knowing the city, being able to slide into a working system would have gone a long way. But I'd raised very little money. It came at the back of the global financial crisis. It came at the back of the microfinance crisis in India, because that happened 2009, 2010. And let's be honest, it is very hard for female founders, solo female founders, to raise money, and harder still because, I'd not worked in India for a long time. I have never really, worked in a regulatory environment to build something. So it is hard to get people across the line to fund. The first seed capital actually came, and you were asking about my business school class. The first seed capital of the 500,000-600,000 I raised, a third of that came from my business school class. So when your classmates are putting their money in your idea, that you bloody better deliver. But most importantly, I think it became a practical question of, there's a huge differential in hiring cost in Bombay because of the cost of living expectations, understandably. Hyderabad would have made sense. I did some work there. I love the city, but we were still coming out of the Andhra crisis, and there was still a lot of a lack of clarity of where all of that was going to settle. And Bangalore has good talent, tech, which was going to be core to my idea. So tech and talent, financial services talent. We have some very large MFIs at the time, now small finance banks here, also other banks here. So it made sense to be in a major metro that allowed me to bring tech and BFSI together.
Yeah, understood. And what were some of the key learnings that you got from the pilot on which you built the business model going forward?
Yeah, I mean, I think one of the things that that came out of the pilot for me, most importantly, was that we had to center our decisioning, underwriting on cash flow based analysis, understanding the business cash flow. Look, let me just step back for a minute. At the end, what I started was Kinara Capital essentially gives unsecured business loans in the range of 1 to 30 lakhs. Our average ticket size is around 8 to 9 lakhs. When we started, it was smaller. It was more 3 to 4 lakhs. And then of course, over time, as customers mature, we have increased that ticket size. But fundamentally, it is small business lending, and it's unsecured. And so what was important for us is that to be able to understand not only the character of the customer who is borrowing, but the cash flows of the customer who's borrowing, because the cash flows is what they would use to pay back the loan. So how do we get to that? That was a big learning for me. The second big learning was that we cannot outsource origination, we cannot outsource underwriting, and we cannot outsource collections, right? The whole model rests fundamentally on us owning the customer end to end, owning, understanding, and being able to build the right products with the right features, being able to work with the customer through their difficult times. And frankly, the last few years, we have all had very difficult times. So to be able to have that deep understanding of that customer segment and their challenges has really helped Kinara be a better lender.
Right. And so what were the few steps that you took while setting up Kinara in the first place? I'm sure talent is the most challenging yet difficult part to begin with, and to hire right people, it takes a lot of time. So how did you set that up for yourself?
Yeah, I mean, as far as setting up Kinara from a talent perspective, I took two things to heart. One is that, I wanted to make sure that we as an organization were a very inclusive organization, and that had to be there from day one. It had to start at the top. So it was, it was and is and continues to remain a core mandate of everything we do. And so even early on, my goal was, let's bring in the right people. And right did not mean that they had done this before, they have the perfect skill set, they have done it at a larger organization, they're going to come and replicate it. For me, it was not that at all. The right people means people with the right attitude, the right hunger to build something, the right focus on what we are trying to achieve, whether it's for the customer or whether it's the organization. And so, very early on, I mean, my COO I met literally within the first 6-8 months of being here. And he had a lot of field experience from having done microfinance. But here was someone who had the right attitude. He was willing to take a chance on Kinara because he believed in the idea. But when we first were working, we were working from my third bedroom. So we were literally a garage setup, right? And to get someone in India to think in those terms is not always easy. So that was like one of my first big hires. The next big hire was my CFO. She came with not as many years of experience, not as many white hair, still not as many white hair, right? No financial services background, but she was very interested in what we're trying to do and why we're trying to do. And she was passionate about what we were building. And to this day, that passion continues. And, to me, learning on the job, I was learning on the job. I had never worked in a regulatory environment. So that was not the constraint. In fact, to me, that was actually our secret sauce, that we were not encumbered by all of these things about small businesses or how things operate. We were just looking at each of the challenges in front of us as just a problem that we have to solve today. And if there's a problem we have to solve today, we just go about it, bit by bit till we get to the other end of it. And that has really served us well.
But tell me, after talent, what was the other step in setting this up? How did you reach out to your customers?
Yeah, so customer outreach, when we decided that we were going to do everything in-house, it meant that we would pound the pavement. That there was, 10, 11 years ago when Kinara first got started, there was no shortcut to this. Facebook was barely there, right? Yeah. So that digital era that we see now and that we experience now and that our MSME customers are now getting comfortable with did not exist. Smartphones were also not something our customers carried back then. So it really was just going to, manufacturing. So we spent a lot of time with our customers, our micro manufacturing and trading and services. A good chunk of a portfolio, 40-50% is in manufacturing. So manufacturing tends to happen very urban, outskirts of big cities, in clusters or in industrial clusters. And we started there. We were a small team. We knew that, that was a good way for an outreach into an area. And frankly, I did some research. When I first moved out here, I actually, commissioned research, primary research, to understand where the biggest gap was. And manufacturing turned out to be the biggest gap for unsecured business lending. Because if you think about it, you're a small business owner, machine components or textiles or furniture, whatever it is you're building, you're typically in urban areas in tier 1, tier 2 cities, but more on the outskirts, where property prices are very high. And so the affordability for that small business owner to ever buy a property is, it's an aspirational dream. And yet that person still needs to operate the business. So found that gap was very large. The second big gap was also around machine finance, not just working capital. And you need machinery to operate a business when you're manufacturing, and those machines cost money, and not a lot of businesses were financing, or not a lot of bankers were financing that. So our initial outreach was all around these machine manufacturing, small business clusters of manufacturing in and around cities. And even today, we are very tier 1, tier 2, tier 3 operating, business rather than rural. And the other part of that was path to profitability. For me, it was clear from day one that I needed to build a business that reached profitability. I needed to build a business that could sustain the long run.
Yeah.
Right? So
in 3 years itself, you turned profitable.
Did.
How did that happen?
Painstakingly. So I think it's just really about focus. It is about focus on the fundamentals. Every business has a well understood unit level economics. Our unit level economics are pretty straightforward. It doesn't take long to understand. There is you earn revenue by charging interest on capital you've given to the customer. You have cost of that capital that comes when you borrow from another entity. You have operational expenses with field resources or technology or what have you, and then the rest is your profit, right? So how do you optimize across all of these elements to get to that number? I mean, we turned profitable at a book of 72 crores, which was, very aspirational for us, and I'm really glad we did that. Now we've been in 8 years of profitability, seen all the cycles we've all gone through the last several years of industry and pandemic, and can essentially demonstrate that focus on the fundamentals of unit level economics.
Yeah, and profitability is not something unachievable as people think it to be. Yeah, you said you've seen a lot of market cycles in the past 8 to 10 years. So can you tell us what were some of the key changes that it brought about in the fundamentals of the business that you are operating?
Yeah, absolutely. Well, first of all, I mean, we saw market cycles in India with demonetization.
Yeah.
Then we saw GST, which impacted our customers tremendously because our customers were talking about manufacturing or even trading for that matter. When you have, payment cycles that go out that were 90 days that all of a sudden become 180 days, your working capital need has just, quadrupled, right? So there was a huge impact. Small businesses were feeling that, that gap of capital. Then we had the financial services industry crisis with ILFS, followed by DHFL the next year. Economy was starting to sort of show some signs, and then pandemic. So many of these cycles that happened, and in between there were like all the mini things that. So I think what I would say, maybe the three things that one, learning around just having that profitability really helps to cushion these externalities that you don't know what it is, where it is, and when they might come. Focusing and remaining focused on the customer. We have not wavered from our customer segment this whole decade plus. And what that gave us and gives us every day is tremendous insights into what are their challenges, what are their opportunities, and how we can support that. And it would be so easy, to just flip and sort of say, oh well, this is not working, let's go there. This looks exciting, let's go there. But it's much harder to stay with the customer segment for this span of time through these large events, because it requires us to continually remind ourselves of our mission, of why we do this, what we do as an organization. The third thing, what it did was, because we are so close to the customer, we understand how they were transforming, and certainly during COVID, we saw that the digitization that is happening and in the country, and how they have sort of leapfrogged that all of a sudden, recognizing that our customer is ready. He or she may be new to digital, but is ready to participate in the digital economy. And so one of the shifts that we made internally, while we have always been a tech-driven, tech-focused, tech-enabled organization, paperless from day one through our entire origination, underwriting, collections process, we completely revamped our tech during the first wave of COVID. And what that did for our customers is we were able to compress our TAT, our turnaround time to make a loan decision, which used to be 7 to 10 days. We were able to get that down to 24 to 48 hours. So here is a customer, all of a sudden, in need of, who needs capital, all of a sudden knows within 24 hours that there will be money in the bank that afternoon. And that goes a long way in building customer loyalty and stickiness.
Yeah, right. I'm also curious to know that since y'all are into the business of unsecured loans, how do you really measure the person's character and their history, if they will be able to repay the loans or no? What are the parameters basis what you do the checkup?
Yeah. I mean, look, we collect over 100 to 200 variables of information. One of the things that I think we are very fortunate to be in a country that is highly regulated sometimes. I wouldn't say that I always feel that when as a provider of information to the RBI, but I do understand what the RBI has been trying to do, and they are trying to make sure that there is an financial ecosystem that works, right? So when we talk about, one of the things that we started way back a decade ago was making sure that all loans are reported to credit bureaus. And it was the non-negotiable, right? So RBI made it a mandate. So I would say back then, most of my customers had no credit histories, right? Today, most of my customers have some personal credit history. But we are often the first business loan that they are taking. And what that does is it allows us to see, right? We said character of a person. If you're taking a personal loan for a bike or a fridge or a TV or whatever it is, and you are demonstrating that you're paying that on time, it does demonstrate your intention to pay, right? The rest of it, I mean, so that's just one element of it. So across, what we're looking at is obviously information about the individual, their histories, who are partaking the loan, information about the business. Does the business have the ability to pay? And that we use a variety of techniques to calculate that information. Certainly, we are looking at cash flow based analysis of the business. We work across 300 subsectors across manufacturing, trading, and services. So we have a deep understanding of what profit margins look like in local geos that can be applied, and then how that overlays into what our calculations then tell us what is their capacity to pay. And then, of course, all of the other past history that we have with similar size, similar type customers allows us to then predict the risk, which is the third element of it.
So which sector is the most risky basis your past records?
I would say no sector is risky, and yet every sector is risky at different points in time for different reasons.
Yeah, that's true.
If you think about what was happening during COVID, right? I mean, people would say, oh, small business stores, provision stores, oh, they're risky. There's so much competition. There's a little, store in every corner, and now Amazon's coming or whatever. But look at what happened during COVID. They were the businesses that were considered essential services. They were the ones that were operating. They were the ones that were the least risky.
Yeah.
So I don't believe that there is a risky sector in particular. That said, there are things that we will not fund. We will not fund tobacco-based businesses or businesses that have a negative environment effect, like mining or forestry, or businesses that are on the brink of ethics, right? So those we will not fund. But then beyond that, right? As far as day-to-day small business owner sectors are considered, all sectors are good sectors. All customers are good customers when you start with them.
Yeah, on that, do you think women customers are more loyal and better in terms of their repayment?
I would say women customers are more capital starved, and hence the ability to fund them allows that bridge to be built, that trust to be built of capital and outcome. We have a Hardika's program, by the way. This is a program that we have for women-owned, women-operated small businesses that we give a discount to, and then we support that with a variety of add-ons, add-on services or giveaways. I mean, I wouldn't say it's a chargeable service. It's really just our way to try to move women-owned small businesses forward. So it's a Grow with Kinara series. We have done business skilling with them. We work with women entrepreneurs, and we are very passionate about this. I'll give you some stats. While we talked about 60 to 65 million MSMEs in India, only about 10-12% are women MSMEs, and that's a problem. There are 50% women in the country, right? And what is also the other stat is that 40% of employees in these small businesses are women. So women are there in business, in these small businesses. They are supporting, but the small business, but they're not getting support to start or run and operate a small business. And so we committed, just to give you a sense, we have disbursed over 400 crores in the last 4 years to small businesses that are women-owned businesses. And this year we've committed 400 crores for 1 year alone. And hopefully that gets us, to do more with women-owned business. We're very, very, very much looking.
Yeah, this also brings me to that question, where we all know that women contribute to about 30% of the GDP. They take most of the consumer decisions at the core in the households, but yet they are the most underserved. Capital access is not given to them. So why do you think is that the case, and how are we changing it?
Yeah, I mean, look, the issue is so deep-rooted and systemic. I think that the change will have to come at multiple levels. Often, women end up being entrepreneurs by necessity, especially micro businesses, because either they need to support their family with an additional source of income, so they start something, often home-based, often informal and very much, not in the fray of the ecosystem, right? And so that makes it difficult to find women businesses, formalize them in some capacity, and then help them with capital and other services to help them grow. So that's one. And then of course the women, and there has to be systemic support, right? So unless that systemic support exists, it is not possible for any one institution or any one idea to really move that forward. So I think there are multiple forces. The individual, the woman herself needs to want it, needs to be passionate about it, needs to want to face whatever challenges that come with it. The systemic support around her, whether it's family, whether it's community, needs to be there to push that forward. And then what we can do and what we are trying to do is make sure the capital is there. If you have these two things ready to go, that is the capital now available to make that last mile happen. And that's what we are pushing for on our way to support. But really the problem is multi-level deep.
Right, yeah, it all starts from home, and I think that's where the issue needs to be sorted first.
And the person has to really want to face all of that, right? And have the support to do it.
Right. But while we at Kinara are the powerhouse of capital for other women entrepreneurs, how was it for you when you were raising money? Did you face any biases?
Oh, of course. The world wouldn't be the world without them. Absolutely. The worldwide stat on private equity capital going to women founders is very low, 3%. So that then compounds for somebody who has been away from India for so long, is starting a business in an industry that I've really never worked in, that is highly regulated. So I understand the stack that makes it difficult for a person. I mean, raising capital for any startup is hard, and it becomes that much harder when you have these other challenges in terms of regulatory, and of course the no experience, and so on.
So can only be addressed when stories are shared.
Yeah, but I mean, I don't think that saying that changes anything, right? I think that we've all faced it. I don't think there's a single woman who is going to listen to your podcast who will not be able to reflect on their own personal experience, and that has come to them in different formats in different places. So I don't think that the comment is important. I think what is important is that it happens. What is important that it will happen. And what to me, what we have to do is we have to take control of the room. We have to change the narrative. We have to, when they're speaking only to the men in the room, we have to bring that conversation back to the person who is running the company, or the person who is running the finance of the business, or the person who's running all of the people in the business, right? I have 50% of my management team is women. And so we are often in rooms where there is a very high number of women sitting at the table having these conversations with other people. And we have constantly learning, practicing how to take that control back of the conversation so that our voice is there, our voice is heard, and we are driving the outcomes.
Yeah, I mean, I asked for the comments because, when people hear someone inspirational talk about it, they feel that, okay, this person has also faced it, so it's fine. Even if it's happening to me, it's just fine. It's not something different.
But it is not fine. And that is the point, right?
Yeah.
So it is not fine. I think that every one of us knows what it feels to be, in that position, feel a little uncomfortable. That it was a off comment. You know it, you sense it, you feel it. So and it is first thing is we all have to say it is not fine. Only then can we start saying, now how do we change that?
Right. Yeah, that's a better way to look at it. And then how did you raise your first check? Which was the investor? Tell us about that meeting.
Oh, sure. Yeah. My first, so I mentioned that I raised a third of my seed round from my business school classmates. My first non-friendly check actually came from Paramore Capital.
Okay.
Chester runs that fund. He lives in the Bay Area. Someone made an introduction, and I ended up meeting him in his office. And And I was literally talking about this idea. I was, what I wanted to do. And Chester is somebody who has been coming to India for 20 years. He was one of the early investors in microfinance. He understands how, small business finance works. And in fact, parallel to what I was telling him, in his mind, as he saw that microfinance was becoming institutionalized and gaining scale, he was all about how do I take capital and make it catalytic. So his goal was, what is the next frontier? And what the next frontier happens to be is this missing middle unsecured business lending. So he was thinking of the idea. I was talking about the idea. Here we were both saying the same things at the same time, and it was meant to be. And to this day, he's on my board still. After a decade, still a great friend and an amazing advisor.
And how does the gender diversity on your board look like?
Oh, it's just as strong as it is in my organization. I have about 40% women on my board that are representing other funds and independent directors as well.
Wow, that's actually a good example to be set for all the companies.
I hope so. I do think it changes the context. I do think that the conversations are deeper. I do think that there is more compassion in those board conversations we have. And I think those are really required for anybody to be successful.
Yeah. And do you remember the most challenging fundraising time for you, keeping aside the biases, technically speaking, where it was difficult to convince the investor and he got convinced, he or she, at the end of it?
Yeah, I would say that, we raised $55 million last year. And while it seems like, oh, that sounds great, you raised that capital last year, the process to raise that capital actually started in the middle of COVID. And so it was a long process. And just as we got started, Delta happened, India shut down, the world started looking at India as to what is happening and wondering, is this the time to take this risk, right? Should we write this check? We don't know how it's all going to pan out on the other side of this. So it was a very difficult time because here we were trying to grow our business. Here we had all our fundamentals right, from unit level economics, tech, people, process, and yet we were in an environment, in a funding environment that was not conducive to India, to funding fintechs and small business lending in India, right? Sometimes, again, hindsight is everything. Sometimes what it does is it narrows your choices. And there is so much value to that, right? It brought the right investors to us, right? We raised this capital from Nuveen, Triple Jump, and British International Investments. And they came together to fund us because they were passionate about the same things we are passionate about, which is the small business entrepreneur. They saw that we had worked with this group during COVID. We had a back to business product. We were supporting them with the emergency credit guarantee line product. We were working with them to replan how they were operating their business so that we could still continue to fund them, even though they might have had to restructure their loan in the first COVID wave. And they saw all of those elements that in the end create impact, right? What we do in the end creates new jobs, sustains existing jobs. The entrepreneur grows his business, her business, and is able to take more income out of that to increase his household income. To then, the benefits of that are, as we can see, right? Especially women-owned businesses with health and education are all fundamental. So when we see that, what we ended up with is stellar investors who are so aligned with our mission that I'm really just glad that we were able to do it. But I can tell you, through the process, there were some very long insomniac nights trying to figure out if we will see sunshine again.
Yeah, but there is a term called as founder's depression. It's a very strong word, but people do have, unfortunately, at the early stages. Did you ever face some challenging times when you were panicking or when you were in stress? And I know at this time the team comes at the rescue, that they are standing as a support for you. But how did you otherwise navigate those such, heavy times?
Intense times, yeah. Yeah, one of the things about being a founder, I feel, and this is something that no business school or not even 20 years at a stressful job in a management consulting organization can ever get you ready for. Look, the highs in everything I've done so far have been incredible. You meet a customer, they tell you their story, the impact you had. They were able to send their daughter to be a doctor. They were able to survive because the brothers who were looking at this individual to support them now all have their own small businesses, whatever it is. Look, I've got goosebumps even now as I talk about it, right? They are just incredible, and there is just no substitute for that feeling whatsoever. But the lows are the worst lows because you have to feel them, you have to embrace them alone. And I'm not only a female founder, but I'm a solo female founder. And so, while I have a great team, and thank God that I have this fabulous team, and I can and do lean on them, but some of those battles are my own and my own alone. And in those times, really, we talked about systemic support for anybody, and those times, the systemic support that was, required came from my own circle of friends and family who were just there. They were there sometimes to listen. They were there sometimes to, offer words of advice. They were there at times just to open a bottle of wine and be. And I think that really went a long way to, and I hope it continues, because I'm sure there will be way more stressful days ahead, even if I don't plan for it.
Yeah, I mean, you are a Sunicon now, so
it's coming.
Yeah, correct. And who have been your mentors in your life when you were studying for MBA at Accenture and now at Kinara?
Yeah. Look, I mean, when I was going through Accenture, I had a lot of different mentors, people I worked for, people I worked with. One person, since we were talking about my time in Hyderabad and Microsoft, was the partner who was running that particular project, Ali Pyar Ali, who understood, he's Pakistani but lives and works in the US, who understood the complexity of building something in India while we were trying to do this in the early days of outsourcing. So it helped a lot to have someone who understood the context and not just how do we apply Accenture values and move the project forward and be able to, to able to curate for that. And that I learned that from him. I saw that in recognizing that things need to be contextualized really well. So that would be somebody at Accenture that I looked up to. In my MBA, while you sat there and talked about large global companies, corporate strategies, problems, etc., the one class that was all around value-based investing, and Professor Bruce Greenwald from Columbia kept harping on localization. And I cannot begin to tell you how much of that message has stayed with me every time we build Kinara, every time. Even when we built the My Kinara app, the first thing we did was made sure that it was in vernacular, because we recognize that our customers need the comfort of vernacular to be able to start their digital journeys. And so understanding that, so it's still an app, it's still digital, it's still new tech, and yet it is very localized, right? So that was the big inspiration for me from my MBA.
That's interesting. And at Kinara, who was your mentor?
You know what? My customers. My customers teach me every day. They drive me every minute to think about what we need to do different, bigger, better, and remain focused on solutioning for them.
Yeah, actually, it's a very unique answer, that for an entrepreneur, their customers are their only mentors to start with, at least. And there's a lot of debate around people being type A personalities in finance specifically, do you think that that's a requisite for you to stay longer in this domain?
I don't think it is, that there is such a requisite. I really just think that for me, being type A means you're constantly juggling, you're, multitasking, you're solving tough problems, you are moving the ball, right? And you're focused on moving the ball so that, and that helps. And what I'm building, what I'm doing, it really helps because we are in uncharted territory. We are building the largest unsecured lending platform there will be in India if we continue on the growth path we are on.
Yeah.
And so from that perspective, it really helps to have that energy to keep going.
Right. And this space, since you said that it offers $1 billion plus opportunity, I'm sure there might be many other players also. So how do you make yourself differentiated, and how do you think this space will emerge with more players coming in?
Yeah. I mean, look, the opportunity is tremendous, and I do hope that many more players come into the picture. It hasn't happened that way the last several years, maybe because of the complexity, maybe because of the external elements or externalities we have all faced. The fundamental way I think about it is that, the way it will evolve really is on the digital side. Our customers will become more discerning. They will want more capital when they need it at the point of need, and not be chasing people like banks to, for 2 months, 3 months to get, even basic capital to operate the business. And that, I think, will be a significant shift in how financial services will have to evolve to provide embedded finance at the point of need, and not chase capital or chase customers that are looking for capital maybe later.
Yeah, and I'm sure what you've created takes years and years to build. I mean, it's a legacy in itself to get your people to trust you for borrowing capital. But how do you see digitalization changing this? Because a lot of people will try to do the same stuff as you are doing. But do you think that there are some entry barriers that are there which will take some time?
Yeah, I mean, look, it's a regulated environment, right? You're a highly regulated environment, and RBI increasingly is getting clearer on a lot of positions around digital lending, around digitization, around integration, around data privacy, data security. And so that builds its own barrier to entry for new businesses. That doesn't mean it's not, that new businesses will not come. They should come, but at least it will come in a very similar regulated environment.
What's the best and the worst piece of advice you've ever received?
Best piece of advice is don't give up.
From whom?
It came in many places and from many sources, and like I said, right, you need that.
Correct.
You need that support structure and those lonely nights for somebody to say, don't give up, right? You're doing something, you know why you're doing this, stay the course, keep the passion alive. And so that is, that I think is the best piece of advice. And I think it's a much needed piece of advice, because there are many days when you were like, is this really so hard? It was so hard today. Do I want to keep doing this? And you need someone to tell you, don't forget, you started this for a reason. You started this for the impact you want to make. You have this passion. So don't give up. Right?
Not so good piece of advice. It's not worse. The worst just makes the question more difficult.
Not so good piece of advice I got was, chase growth at all costs and get the valuation, get high valuation by telling everybody all of these great things that you will do. You don't have to deliver it. You just have to sell the story.
Oh.
And I feel that is really not, in all honesty, not how I operate. So, in terms of values, you carry those middle class values of sincerity and doing the right thing, even if it is with investors who are putting capital at risk. The fundamental reason why I don't think that's good advice, it's very short-lived. And we're certainly seeing that now in so many ways. So I'm glad I didn't take that one.
Yeah. And I'm sure that after hearing you, many others will also take a wiser decision.
Lastly, what's the last thing that you did for the first time in your life?
What is the last thing I did for the first time in my life? Oh, We got to go to the Royal Garden Party a couple of weeks ago, actually. We had a special invite from Buckingham Palace to the Royal Garden Party. And other than it probably is the first time I did that, that was the first time ever I got to wear one of those fancy fascinators, the hats, the hats, because it was a requirement that, women had to wear those hats. So I had to get myself one of those fancy British hats. And that was the first time I've ever done that.
We need to see a picture of that.
They're all over on Insta, on LinkedIn, they're everywhere. I posted. They're also on my WhatsApp if you want.
How did you get the invite? Just very curious.
It was an invitation from the palace. I think that because British International Investments is an investor, that someone from the organization forwarded our names for consideration for an invitation, because what we do here is very much service to the nation.
Wow.
That's quite a good thing. Yeah. But on that great note, we'll end the interview, and I really thank you for sharing all your insights so deeply and being patient throughout the questions.
Thank you so much, Radhika, for having this conversation. It was delightful. I enjoyed our time together. It was great to see you in Bangalore, and I hope to see you more.
Yes, thank you so much, Hardika and the team, for having me here. Really enjoyed the conversation and the insights that I got to hear with Hardika, spending almost an hour. So really appreciate the team effort for making this happen.
Thank you very much.